Monday the 8th of February. Well, a few interesting developments over the course of the week, and probably the Aussie dollar is the most interesting. Aussie dollar's fallen below 86 cents on Friday night, and that's its lowest level since September 2009. A couple of key factors there: global risk aversion, primarily around the problems in Greece supposedly getting worse and dragging the euro down. That's certainly flowed through onto the Aussie dollar, and we've seen a fair bit of selling of the Aussie and buying of the two main funding currencies, the yen and the US dollar, over the course of the week. The other factor was the Reserve Bank's surprisingly keeping interest rates on hold earlier in the week. Nobody was really expecting that, and that also caused a little bit of selling in the Aussie earlier in the week. In the short term, the Aussie still looks under a bit of pressure. Certainly if stock markets continue to fall off, then the Aussie dollar is in danger of slipping a little bit further. But thereafter, I think the Reserve Bank's come out with some significant information. They still expect interest rates to rise probably 75 basis points from here over the rest of the year. They're still predicting higher growth than we've got at the moment and higher inflation. So all in all, you'd say fundamentally the key reasons for buying the Aussie pretty much remain in place. Higher interest rates than the US and Japan means it's the favoured currency for carry trades. And if China's growing at 10%, then the commodity demand is going to be there. So although short term the Aussie looks to be under pressure, I still think medium term you'd certainly want to be long the Aussie. We probably lightened off our positions a little bit, looking for an opportunity to buy this Aussie dollar at cheaper levels. The other significant development is the yen. Again, the yen getting stronger, basically on global risk aversion. And as per our previous updates, fundamentally we don't like the yen. We think it should be much, much weaker than it is. We haven't done much selling of the yen at this point, mainly because of its recent strength, but there's going to be a tremendous opportunity to short the yen when this global risk aversion starts to dissipate out of the market, and we see that as one of the key trades going forward. China's currency, again, as global risk aversion hits the market, the chances of an appreciation of the yen seems to be reduced, but overall we still expect sort of 5 to 10% on the Chinese currency. So again, good opportunity here to buy the Chinese currency against the US dollar. We'll be back with another update next week.